Hello guys, this is group 14 which involves me, myself, Akash Charantimat, Vedant Desai, Divya Sitlani and Omkar Gurav. And we are group 14 and we would like to present about ethic failures in corporate financial reporting. So first, let's understand what's ethics. Ethics is a key part of financial reporting. For any shareholders to trust a company with money, they must feel confident in company's financial reporting. Financial reporting presents all data relating to entities' current, historical, and projected health, meaning investors and shareholders rely upon the financial data available for making informed and educated decisions. To help entities comply with business regulations and maintain financial reporting, shareholders can trust the existing organizations designed to monitor different aspects of accounting world. Primary organizations are Securities and Exchange Committee, the Financial Accounting Standard Boards, and the Public Company Accounting Oversight Board. These three bodies together ensure financial reporting is fair, reliable, and available to all the investors. Regular frauds in the financial reports, some errors in financial statements, and sometimes there is biased reporting, such as managed earnings, have invaded financial reporting in many countries in the past years. The report majorly focuses on ethical issues that are directly related to the failure of the corporate accountants and auditors to fulfill their designated responsibilities. Investors play a very vital role in the company's in a company because they invest a huge capital for the welfare of the public. All the issues in financial reporting just because the individuals don't accept the responsibilities but they could not fulfill the same, or they even breach some of the rules and regulations of the financial reporting. In the below report, we are going to discuss in more detail about regular frauds in the financial report and reasons behind the same. With everybody's views and faults, below are the topics that we are going to discuss today. The first one is summary, which will be explained by Vedant Desai. Second is main body, which contains main details and better explanation of article, which will be explained by Divya Sitlani. Last but not the least, conclusion and closure, which will be explained by Omkar Gurav. So this is the red flag, and I would like to pass it on to Vedant Desai.
Hey, my name is Vedant Desai, and this flag has been passed towards me by my teammate Akash. Today I am going to present summary and the strengths of this article. So the main argument of this article is that company management is not only responsible for the financial irregularities and the shortcomings, but also the auditors, academic accountants, and accounting standard setters are equally responsible for this. It also says that every single group is looking in their own good and ignoring the greater good of the investors. This is happening because of the holes in the rules and regulations, and this won't stop unless the rules has been updated. The main purpose of this article is to create awareness about the issues of other than the financial frauds, which can also reduce the financial value of the financial report. A report states that due to third party arrangement, auditors are tempted to behave unethically and get more loyal to their employers who are company management, which can because of which they ignore the greater good of the investors. The same goes to the academic accountants who receive financial aids from the management, so due to which they might think in the favor of the management. And article also says that due to the close relationship between the standard setters and the management, the standard setters the rules released by the standard setters might be more beneficial for the management and ignore the importance of the investors. All of this the author emphasizes that all of this won't stop unless the ties between these parties has been loosened and proper sets of rules and regulation has to be placed to stop this. So this was the summary, and let's move towards the strength of the article. By reading the article, we came to know that the series of mistakes made by the financial institute. So the financial institute rely more on the complex derivatives and the technology. So basically, if the person puts a wrong number into the computer, due to which the whole uh, calculation can be affected. But if and the technology can detect it. So if it is done, if a human does that, he can easily detect it. They also have lack of risk management and failure to monitor. They also failure to monitor risk. And because of this article, the we can easily find a party who is who, because of which the financial loss has been done, and so it gets easy. And this and the main strength of this article is that it helps to create awareness about the unethical issues among the people. So these are the strengths of the article. Now I like to pass my flag to my teammate Divya.
Have done this presentation on the financial reporting and the frauds that happen in companies. I'm sure my other two team members have explained the introduction and the summary well. So I'd like to carry on with explaining the weaknesses of this article. And according to us, that we feel that this article is not detailed enough to catch the culprit. There are a lot of breaches of the fiduciary duties by individuals who accepted responsibilities but did not fulfill them. Further, fraudulent financial reporting is something that has been seen relevantly in all the fields and companies and major organizations. The basic failure which we noticed was the Journal of Business Ethics failure. And now, coming back, as this article has been written a long time ago, we feel that it is now outdated in terms of recent development and rapid growth of technology. Like, it does not align with the technology we have currently present. And even the revenue recognition standards have changed quite a lot after this article was written. Further, we found out that a fraud or embezzlement committed by business leaders can make many firms but often boil down to following maneuvers, which is misappropriation of assets, manipulation of financial results, lack of disclosure, or misleading disclosure. For example, there is this holding company may carry out several transactions with companies and entitles enrolled by the members of its management team, allowing them to make significant gains. But managers can therefore invest even in companies in liquidation without anyone controlling them. So the usual errors that may be concerned are in products, costs of goods sold, selling fees, related parties account receivable, fixed assets. An opportunity that favors fraud is the pressure geared towards high performance. This generally manifests during stock market bubbles. Rapid deflations of stock market bubbles are often accompanied by the manifestation of fraud committed by business managers. So this is what we thought that the implications and the weaknesses of this article were. Thank you.
Hi guys, myself Omkar Guru. So as you can see, the red flag is passed to me. So now it's my responsibility to conclude this report with a great solution and a proper closure. So the report main purpose is to identify the primary responsibility of different bodies in an organization. Different bodies such as investors, accountant, auditors, management levels, board of directors. So whenever an ethic failure in financial accounting happens, the blame goes to only one body. Whereas as a conclusion of this report, I believe the blame should be shared in all of the bodies, such as management level should take the blame, because the ethic failure happened in financial accounting is because all of them didn't work properly or they didn't follow their core values and responsibility. So the blame should be shared in everyone. So we also understand how ethic failures work and how it needs to be avoided. Above all, parties have their own role and responsibilities and they should be followed. If any one of them didn't meet the values or responsibilities and give their 100% towards the work, then there's a possibility that the ethic failures for financial accounting can be happening. The solution which I want to provide for avoiding ethic failures is implications of accounting educators. So first, let's get to the behind, that who is behind all this and why scandals happens in such companies. So the main character could be a former student, newly graduate of accounting or MBA program. So all of them should always ask themselves why they are doing unethical practice. What are they doing wrong that these scandals are taking place? I also recommend that the classes and the training provided to the student or the people who are responsible for this ethic failures should have a practical knowledge. They should be given a lesson, or they should be told that what can go wrong and what could be the issues which companies could face or investors could face, because the company's capital is on stake if anything if ethic failures happen in financial accounting. So the best done in context, in because ethic issues come up with the context, with you imagining yourself in the real situation. It is easier to go into ethic class and get a case situation and pretend to answer correct, but if one person is taught in practical knowledge, the pressure and the determination or determine the pressure and the confidence of him into being in that situation can give a impact on his working and his ethics and values and course. At last, for a closure, I would like to say that this report concludes that the failure of ethic in corporate financial reporting is a product of various factors, such as the most significant of which are commitment, leadership, trust, core values, communication, training, and a reward and recognition system. So I would recommend that if any company is facing such ethic failures, they should work on this core values and the reward recognition system. It was recommended that further study be done on how to specifically implement ethic and responsibility in financial reporting. Thank you. That's all. That's us for now. Thank you, Habib sir.